Hey everyone, and thanks for jumping back into the Cryptoverse. Thank you for being on the premium list. This is an unlisted video, a premium video, so I hope you guys enjoy the content. Originally, this week, I was going to dive more into the risk metric, like I told you guys last week. I'm still going to do that probably next week or the week after. But this week, we're actually going to be looking at hourly price analysis, and the reason is because so many of you liked the analysis I did a few weeks ago on Bitcoin that showed that statistically speaking and looking at the macro scale, that Monday UTC time is the best day to buy Bitcoin. This is not my own personal opinion, it's just looking at historical prices and noting that buying on Monday tends to be better than buying on other days of the week. In the same manner, for Ethereum, that day is Friday. So for Bitcoin, historically speaking, Monday is the best day. For Ethereum, it's Friday. Now we know that these trends may or may not continue, but at least historically speaking, this is the case. One of the questions I got though was, well, what about, what if I want to buy at a certain time of the day? And by the way, for Bitcoin, the best day to buy was Monday. I think the second best day to buy is Thursday. If you don't buy on Monday and you're wanting to buy before waiting for the following Monday, then Thursday tends to be the second best day. But the question that a lot of people have is, well, what if I just, what if it's whatever day of the week, and I just want to put a purchase order, or not a purchase, I want to put in an order to buy Bitcoin, and I kind of want to time it so that more times than not I don't buy it and then watch the price go down, because it's obviously many of you guys here have been purchasing Bitcoin for a long time. It can leave you with a sinking feeling if you purchase Bitcoin and then every time after you purchase it, it seems like the price goes down. If you, like maybe like 1% or 0.5% or, 0.1%, whatever it is, you want to see if you can squeeze out any more information from the historical data to say better inform your decisions. So I found some hourly data, and this data goes back to July 1st, 2017. So we're only taking into account that information, which I think is fine. I don't think we really need to look at hourly data for the last, say, decade. But this is hourly data from 2017, so July of 2017 through July 1st of 2017 through the present day of 2020, so late May 2020. May 23rd, I believe, is so this is going to be published May 24th. But the data when I got it was either through May 22nd or May 23rd. So let's go ahead and dive in, because there are some interesting things to point out that could help you on the macro scale tend to perform a little bit better if these trends continue. So if we first look at 2017, noting that this only takes into account about, say, the last half of the year or so, you see that purchasing Bitcoin at, say, and by the way, I should clarify, for each time you see here, it's UTC time, and the percentage change is between open and close of that hour. So at, say, 12 a.m., if you see negative 0.05% average change, then that means had you purchased Bitcoin at the top of the hour, then on average it would have been worth around it would have gone down 0.05% over that hour, meaning that on average you would not want to be purchasing Bitcoin at 12 a.m. open UTC. So I hope this is a little bit more informative, because we talked about how statistically speaking, purchasing Bitcoin on Monday UTC open is the best, but this also shows that maybe waiting a few hours, still doing it on Monday UTC time, but maybe waiting a few hours to really squeeze out more from that could be worthwhile, just going on historical data. So what you see here in 2017 is, basically between the hours of 12 a.m. to 2 a.m., there is, in general, obviously you're going to find some situations where maybe the price went up, but in general, the price did go down by about 0.05% each hour. On the other hand, you can see that it went up between 3 and 4 a.m., but one of the biggest times that it went up, one of the best times that it went up was, purchasing Bitcoin at, say, 6 p.m. UTC in 2017. And you can see that had you done that on average over the course of the next several hours, then the price of Bitcoin was moving upwards. Now remember, this was a bull market, so there's a lot more there's a lot more hours that have percentage change upwards rather than downwards. And this is also just in general because, in 2017 prices were just generally going up. In 2018 we had a bear market, and you can see there's a lot more time when we had negative or percentage moves to the downside. Again, the early hours of the morning UTC time, so from 12 a.m. to 3 a.m., you can't really see 4 a.m. because it's basically just zero. But you would not, in the same manner, purchasing Bitcoin at 12 a.m. UTC, typically speaking, would result in moves to the downside over the next few hours. You can also see, if you look at, say, 7 a.m., there's also a few hours in a row where there was a move to the downside. So you maybe would consider purchasing at around 11 a.m., the top of the hour at 11 a.m., because this was met with the biggest percent growth on average. And then, it kind of oscillates back and forth over the next few hours. If we go to 2019, so this is more of an accumulation year. So we had our 2017 bull market, we had our 2018 bear market. So 2019 is more of what I've said is our accumulation year, just like 2020 is an accumulation year, in my opinion. There's definitely a mix, and you can see that in the early hours of the morning, there's a lot more to the downside, and as the day gets more mature, so as the day goes on, there's more to the upside. And again, this is UTC time, so you'll need to convert this to whatever time zone you're currently in, because I can't, just convert your current time zone to UTC and then apply the shift appropriately. If there's enough people that want, maybe I can make a Google Sheets tab so that you can do this automatically. But this is the idea. You can see here, while there was a move early on at 12 a.m., over, from 2 a.m. until 6 a.m., there was still a significant move to the downside. And then the upside again came later in the day, starting at 10 or 11 a.m., where we saw a lot of hours of sustained growth with a few hours sprinkled in where on average it went down. Looking at 2020, we see something similar so far. It tends to look more like, again, like an accumulation year, unlike 2017, where we had a ton of data points that were, basically just always moving up. There is, the percentage moves in, say, 2020 tend to be a little bit lower than in 2017. But you can see here again, the early morning is not so great. There was a decent move on average between 2 and 3, but between 12 and between those hours of the early morning, between say 12, 1, 3 a.m., 4 a.m., it just tends to not be the best time to purchase. But again, later in the morning, maybe 12 p.m. or so by midday UTC, this is when you see a lot of the positive price movement on average. Now, what if we take into account our bear market, our bull market, and our accumulation phase and just pack it all together, because it's hard to know exactly what market you're in each year before it happens. We can speculate, but on average, where does it put us? So if you average out all the data over the last, since July 1st of 2017, you can see that again, purchasing in the morning, so basically from 11 p.m. is probably 11 p.m. UTC, is probably one of the worst times to buy, because on average for the next, say, several hours, so 12 a.m., 1 a.m., 2 a.m., 3 a.m., 4 a.m., and 5 a.m., on average the price was going down over the last several years. And you could make the argument that maybe 6 a.m. is a good time to purchase UTC time, because this on average leads you to the first positive price movement. And while there are sporadic moves to the downside, it allows you to catch the majority of these moves up. Like, historically speaking, you can see there's, a couple hours here and there sprinkled in with some hours to the downside. I mean, we know it doesn't go up monotonically. It definitely goes up and it comes down. But at least by not purchasing at, say, 12 a.m. UTC, then on average you would be ignoring the immediate move to the downside, which is basically the idea. We know that if you look at the macro scale, purchasing on any individual day can be, it's basically just hit or miss. Like, the price could go down immediately after you buy. No matter when you buy, it could also immediately go up. But you can at least use this information to know that if you carried out a systematic strategy where you are purchasing Bitcoin on, say, a certain day of the week or a certain day of the month, then maybe you could implement the fact that UTC time from 11 p.m. until 5 a.m. prices on average tend to go down. then maybe this would be a time to avoid buying Bitcoin. Now, this is not financial advice. This is just looking at what the data tells us. And again, past results do not indicate anything about the future, but I like to say at least they can help inform our decisions. It's better to have the information, and then you get to choose what you do with it, rather than just not have the information and just wonder if there would have been a better time to purchase. And so maybe the idea is if you purchase at, say, 6 a.m. every, whatever your schedule is, then over the course of several years, maybe it would be slightly better than purchasing at, say, 12 a.m. or 1 a.m. And again, this is UTC time. I've also provided a figure so that it shows you all the years next to each other, so you can peruse that. I mean, you can generally see that a lot of the downside is clustered earlier on in the morning, and a lot of the upside is clustered on later in the evening times. Maybe the late morning, early afternoon, and especially going into the evening tends to be when it performs better. Now, obviously, regarding, say, statistical significance, there could be individual days that could be strongly weighting one way or another. I'm not, for the purposes of this video, I'm not exploring it that deeply. We're just taking the numbers and then just looking at on average, how would you have done? Again, the last part of the paper basically just looks at risk. Now, when I made this, these were the prices. I understand the prices have gone down recently, not by that much. At the time of this video, I think Bitcoin is currently testing the 50-week moving average, which is around $8,800, $8,900, somewhere in that region. So I would say that's probably a critical area for us to hold. And if we don't hold it, that doesn't necessarily mean that our bullish momentum is gone. It just means that we need to hold the 20-week moving average down at, say, like $8,200, $8,300. Depends on the price right now. The 20-week I think is around $8,200, but by the time we might get there, it could be higher. It could be $8,300, $8,400. So again, these graphs just go through the various risk metrics of a few of the different coins. If you're unaware of the Google Sheets document, I want to make you aware of it. So we recently, I've added a few things on here so you can see we have the price of Bitcoin, Ethereum, Cardano, Link, and Litecoin. We currently have the risk metrics for 4 of these coins updated on here. They're interpolated live. I think these prices are updating automatically, but I'll keep an eye on them. Sometimes it seems like they mess up. I've also added on here a bull run necessary but not sufficient conditions tab. So far, I'll add, there's a few other things, I'll add them on as I have time, but 2 of the main things that I talk about are, we need to be above the 20-week moving average, and you can see here, we are above that. You can see the weekly and 20-week is 82.37, and then our current price is 89.66. So yes, we're above the 20-week. Have we printed a golden cross? This is when the 50-day is above the 200-day. Yes. Okay, so those 2 conditions are met for a bull market. Clearly they're necessary but not sufficient. So just be on the lookout for us to hold the 50-week, if not hold the 20-week. If that doesn't happen, then you need to be looking into potentially consolidating your positions, because dropping below the 20-week indicates in the short term that altcoins and these other coins tend to perform a lot worse than Bitcoin on average. You can always find a few coins that might perform better, but on average, Bitcoin is where you would want to be. You can look at your risk schedule. So if you're conservative, moderate, or aggressive. We also added a few more on here as well. We have conservative, moderate, aggressive, super aggressive, the hodler, and YOLO, so not recommended. Basically, I'm in this region here, the moderate. I purchased Bitcoin up to a level of 0.5, and above 0.5, I stop purchasing and I start selling. The risk right now is 0.384. And, I get a lot of people asking me, well, especially last week around $10,000, they say, well, can I just do a lump sum? Well, you can do a lump sum if you want. I mean, if you don't own any Bitcoin and you want to get exposure to the market and then dollar cost average in once you do a lump sum, obviously you can do that if you're okay with that risk. The point is that price and therefore risk do not go up monotonically. We're going to see moves up, and then we're going to see retracements. We're going to see several 30 to 40% retracements, even if we do go into a bull market over the next several years. So you have to keep that in mind. There are going to be retracements. We've shown this in many videos. It's just a matter of when they come. So had you put in a lump sum last week at $10,000 and maybe you don't have cash on the sidelines to put in now that the risk has dropped below zero point 0.4. And remember, the multiple on purchasing Bitcoin in the 0.4 regime, or sorry, the 0.3 to 0.4 regime for me, since I take on a moderate dynamic DCA, is now 2. So I'm purchasing a little bit more Bitcoin weekly than I would be if we were in the 0.4 risk regime. And you can kind of feel how different, once you experience it long enough, you can really feel the difference between the risk regimes, I think. And I at least it's like that for me. You can imagine, when we're pushing $10,000, it definitely feels like the risk in the short term is higher because, it wasn't that long ago we were at $3,800. But now that we've backed off, we're at $8,900, it feels kind of like we're in a different area of risk. So this is just a way to quantify that risk rather than just let it be how you feel, in a sense. Another question I want to make sure I address is a lot of people say, well, if I sell all my Bitcoin at $39,000, then aren't you selling it way before a theoretical all-time high of, say, 150,000 or wherever the speculative bubble peak is? So I need to remind you guys, these risk values are dynamic. They will change throughout the market cycle. $39,000 today corresponds to a risk of 0.99, but in say 2 years, the risk at $39,000 might only be 0.7. So these are updated. Okay, they're updated about every week, and you shouldn't be concerned about it because they only change in the third decimal or so every week. So the risk values that you see here with these prices are the instantaneous risk. So if the price of Bitcoin were to go to $14,000 today, or say this week, then the risk would be 0.53. If it went to $39,000 today, then the risk would be 0.99, and I personally would be running for the hills in the short term because something like that just usually it's not sustainable. So consider that. I mean, the same thing applies for Ethereum and the other coins that we have on here as well. So, I'll probably make a public video in a little bit talking about some of this stuff, but remember, if we drop below the yellow line, so the yellow line is the 50-week moving average, this is our support region right now. It's currently at around $8,800 or so. If we drop below that, our next area of support would be the 20-week, in my opinion, so around 8,200. So be on the lookout for this. If you see us drop below this, then we're likely headed to the 100-week moving average at 7,100 and maybe even down to the 200-week moving average at 5,800 or 5,900. Are these concerning to you? Well, I mean, if you're not, say, a day trader and you're looking at the macro level picture, remember this, seeing a move to the 200-week moving average, or even if we're lucky, the 300-week would present you an opportunity to get your weighted risk down significantly. So this is why it's always good to have cash on the sidelines. In the same way that I say there's a risk to not holding Bitcoin, there's also a risk to not holding capital, or to having capital lying around that you can use to purchase Bitcoin if the price were to plummet. And you have to remember, there's always a possibility. There's one thing we know, it's like and I've said it before, Bitcoin will crash. It's just a matter of what it does between crashes. So if you see it going down, then make sure you capitalize on that opportunity rather than being, say, the person that capitulates at the bottom of that wick or whatever. So again, this is not financial advice. This is just, in general, you want to be smart money. You want to make smart decisions. You don't want to make emotional decisions when the market is moving like crazy. So I hope you guys enjoyed the premium video. I hope you guys liked the analysis with regards to the time of the day. And if you have any questions about it, let me know. Shoot me an email. You can also leave a comment down below in the video, and I'll try to respond to it. But again, if you have other ideas for future videos, you can always go to the Google Sheets tab. Maybe I should actually make a different tab because we have a one tab called feature requests somewhere over here. So feature request. Maybe I'll make a new tab that'll say weekly newsletter special topic request or something like that. So watch out for this, and so that way if you have any special requests for a topic, then we can go through that as we as we continue marching along this journey that's likely going to take us, say, the next several years, and then we can, out at sometime in 2023, hopefully maybe 2024, if it gets pushed back, if it gets pushed back too far, sometime in that time frame, I think we're going to look back on these days and be happy that we were diligent and had a plan and stuck to it. So I hope you guys enjoyed the video. I will talk to you next time.